Still think it's a buyer's market in SoCal? Stop scrolling. Sounds crazy to say, but after housing demand dropped to record lows, there are very early signs that the buyer's market is over in SoCal. In this video, we'll take a look at surprising changes in leading indicators that show that housing demand may be coming back, and we may end up with one of the busiest fourth quarters that we've had in home sales in a while. It's time for the Southern California Housing Market Report. So what's a leading indicator and why should we care? Well, a leading indicator is giving us a clue that there's going to be more home sales. What would be a good example of a great leading indicator? What happens before people go out and they start shopping and buying? Well, they're supposed to do it before they start shopping. And that is filling out a mortgage application. Now, of course, obviously cash buyers don't have to do this, but those majority of buyers out there who are going to do a loan, they're going to go ahead and fill out an application and purchase a home. So not everybody who fills out the application is going to buy, but this is a great way to see where the market's headed. It's not always perfect. And when we see a drop in mortgage interest rates, we can see that the applications tend to move up. When rates dropped last year around this time, the purchase index went up. So now what's happened is things have gone off the rails. So things slowed way down when interest rates went up, and they've been slow. And then we get into 2025, and we've had a slow 2025. There's no doubt about that. You've been watching these reports. Then we see this spike in July where the purchase index went higher than it's been in a while and higher than this past January. In fact, higher than January of 2024. So folks are out there applying, and rates were still relatively high, but they were on their way down. And you can see here in September that we have more folks applying for loans. What this means, if you go back to July, this should translate when we look at our August numbers in Southern California, we should see an increase year over year in the number of properties going under contract, if this is a good leading indicator, and I can't wait to show you what happens. One other important point is we can actually compare year over year. So if we go back to last year, the purchase index was lower. It peaked around 149 when rates dropped to just above 6. Now, what's interesting is right now, we're at 169, so the purchase index is higher year over year. It's gone up. More people applying for loans, but the mortgage interest rate is not as low as it was a year ago. So if rates continue on their trend down, we're seeing the 10-year Treasury go down. It actually looks like it's going to dip below 4%, and it may, by the time I release this video, that is going to lead to lower mortgage interest rates. And we can see here that we've already got an increase in the number of people applying. And as rates go down, we may see more apply. So let's see if this leading indicator is showing what we think it's supposed to show in the data for Southern California. Crunching our numbers, proprietary way. So there's a lot going on here. Don't be scared. I'm going to go ahead and guide you through here. So the black line is mortgage interest rates. We can see during COVID just how crazy low they got. Don't you wish you would have bought everything back then? And then Russia invades Ukraine and interest rates start to go up. And then 2023, they get to 7, which is outrageous. And we've dropped a little bit, but we're not as low as we were last year at this time. So that's important to put it in perspective. And then the red line is new listings. Yellow line is the number of sold properties. And the white line is buyer demand. Those are buyers writing offers. We see everything fell off a cliff during COVID, and it's been low. We've been reporting that for years now, but things are changing. So we saw inventory go up year over year from 2023 to 2024, but it's dropped slightly. So new listings are down year over year. The number of properties that have sold, that's pretty flat. And what that's reflecting, now Orange County is atypical. It was still chugging along pretty well. So the number of sold properties is flat year over year, but you'll see in some other counties where it's down. So what that's reflecting, the sold property is not a leading indicator. That's a lagging indicator because the property's already sold. So the pending sales, the escrows were low in the months before, and that's why the number of closed sales are low. Now, speaking of pending sales, the white line. So pending sales, that's buyer demand. Buyers have written offers and the properties are under contract. Doesn't mean they're necessarily going to close, could still fall out, but it's a trend that we can track. So look at during 2020 when we had these crazy low interest rates and the huge number of people writing offers back at that time. We're at half those levels now, but year over year, we're up. So we're seeing an increase in demand. That dovetails in with what we saw in mortgage applications. So we saw that increase in July. That means people would be out writing offers and getting offers accepted. Some of them got them accepted in July. Others got them accepted in August. And still others will continue to potentially shop and write offers. But we can see that so far that's matching up, that we're seeing more action. And what that's going to lead to is more closed sales, an increase year over year in closed sales based on the number of pending sales. Still early to tell, but it's looking like we're seeing more buyers out there writing offers. And some reasons why, well, the fact that prices have dropped, we're going to show you the median home prices. At the same time, we're seeing a slight drop in mortgage interest rates, and that could potentially continue to go down for mortgage interest rates. There's good reasons for buyers to be out there. Plus, in many cases, there's quite a bit of inventory to choose from. And I'll show you the inventory numbers as well, although that's changing. So LA is another one. We can actually see that new listings are up very slightly. We can see sold properties are down year over year, and that again is because we had a reduction in folks writing offers in previous months. And to go ahead and extrapolate that, there were fewer people applying for mortgages in the previous months before they wrote offers, and that's how we have the drop in solds. So that's the trend. Month over month increase in pending sales dovetails with the mortgage applications. Let's keep checking. Riverside, increase in pending sales year over year, better than 2 years ago. That dovetails with what we're seeing in the mortgage applications. You getting sick of hearing this yet? So despite the fact that we've heard it's more of a buyer's market, buyers are now realizing it and getting out there and writing offers. It's still very early. You're not going to hear this in other news sources because they're not looking at leading indicators the way we are. In many cases, they're looking at lagging data to go ahead and surmise what's going on. Yeah, the market was different 2 or 3 months ago than from where it is now. Again, what do we see in San Bernardino? We see an increase in the properties going under contract year over year, approaching 2022 levels. What does that mean? This means fourth quarter could be busy for buyers and sellers. Even Ventura, where everything has continued to drop at crazy levels since the end of COVID, even in Ventura, where everything has continued to drop and usually it's just crazy news, we can see that Ventura is up for the number of properties going under contract. That's big news if you've been watching these. San Diego, how about you? Yes, you're up for number of properties going under contract, higher than 2023 and 2024. So fourth quarter, we could see more homes closing. Moving into the multifamily data, one of the only places you're going to get these numbers, we're talking about anything 2 units or larger in the respective counties. Same thing, we have the mortgage interest rates overlaid with new listings, pending sales, and sold. Definitely a different tale in the multifamily market. The reason being, for multifamily real estate, as mortgage interest rates go up, it will lead to properties not cash flowing as much. We're seeing an increase in cap rates in the properties that sell. And what that really means is that the values are lower as compared to the income. So the sellers need to give a buyer more of a return, a higher return, in order for the property to trade. So we're seeing an increase in cap rates. It only makes sense if your mortgage payment is 7 or 6% to acquire the property, then you got to have a higher cap rate to cover your debt service. So we can see that pending sales are down year over year. Hey, LA is a tough multifamily market. Despite that, we're seeing an increase in the number of pending sales. So why do I say it's difficult in LA for landlords? Well, there's rent caps and rent stabilization, very low numbers for the increase on rent. And then there's not much turnover, which means the landlords can't get the market rate for the property. So the income is tough to increase in LA, and because of that, you tend to have to trade at a higher cap rate. We're seeing stuff listed at 6s, 6.5s, approaching 7% cap rates, which we didn't see that during 2020, 2021, when mortgage interest rates were low. Stuff was trading at low cap rates. Riverside, we've got demand up. So we are seeing an increase in demand in some of these counties, and we're seeing a drop in the number of new listings. San Bernardino and Riverside tend to be more affordable markets for investors. It's a lower price per unit market, and we can see demand's down slightly. We can see inventory is down slightly for new listings. Ventura, they don't have enough buildings to really extrapolate much from. We'll continue to share it. And then San Diego, we can see, and we've had in San Diego, we've had this big gap between the new listings and pending sales. And what that means is choice for investors. So in order for a building to trade, it has to have something compelling, whether it's turnkey, whether it's a great cap rate for the buyer, high income, things like that would help a building trade. Lots more choice. Down for the number of properties going under contract. In fact, in San Diego, this is the lowest level that we have since 2018 for the number of properties going under contract. That means that it's going to be low numbers for sold. So we have to continue to see what's going on with multifamily numbers. Single family numbers, it looks like we're seeing a return of buyer demand. And multifamily doesn't look like we're seeing that across Southern California. Median home price madness, diving into the Southern California median home prices, starting with single family. We're gonna look at condos, compare. Let me know in the comments below if this is way too much data. Am I going too deep? I guess you'd be gone and not watching anymore if I'm going too deep, so you probably won't say anything. But let me know, and if there's anything else you'd like me to add in, let me know. So first things first, looking at month over month, not a strange thing to see this time of year where we start to see the median home price drop. And month over month, we're down for Orange, LA, and Riverside for single family homes. So month over month, seeing the drop in that number. Now, year over year, we see a 0.7% increase in OC. LA's up 1%. Riverside is flat year over year. Now, if you factor in inflation, those numbers then would actually be negative. But we're not seeing negative numbers for single family homes year over year like we have in previous reports that we've done. But what we're seeing is a dramatic slowdown. We're not seeing a huge spike in values like when we had the 10s and 15s and 20% year over year. So again, that's why I feel buyer demand is starting to go up, because you're seeing a drop in prices. There's an actual drop in the median home price in the past couple months. At the same time, mortgage interest rates look like they're going to continue to drop. So there's actually an opportunity. Buyers still paying big numbers, but things have stabilized, and maybe we'll go the other way. Now looking at condo numbers, and we've got that drop month over month, except for Riverside where it went back up. So it spiked in Riverside month over month. How about the year over year numbers? OC is up 1.3% year over year. LA, and this is why it's helpful to split the data out, is down 4.3% year over year. So that's a pretty big drop in the condo and townhome prices year over year. Riverside is up 4.4%. So that's a pretty big increase. That definitely outpaces inflation for the increase in condo and townhome prices in Riverside. San Bernardino, Ventura, San Diego, tell us what you have going on with median home prices madness. Well, we've got that drop, except for San Bernardino. San Bernardino is up month over month in the median home price. The other two have dropped. In Ventura, we actually see a pretty big drop. Now, year over year for single family homes, San Bernardino is up 1%. Ventura is down 2.8%. So there's one of the negative numbers we talked about, just like we saw the negative numbers for condos in the last set of data. San Diego is up 1.3%. So again, factoring in inflation into these numbers, these are not increases. Things are slowing. The increases are slowing in single family increase in median home price. And finally, the condo prices. You see how jagged these are? That just means because there's fewer data points, so just aren't as many condos and townhomes trading in these particular necks of the woods. And we're flat in San Bernardino for condo and townhome prices month over month. San Diego decided it was going to increase. Ventura is down. And then year over year, San Bernardino year over year, 6.8% increase for the price of condos and townhomes. That's a big increase. Ventura, negative 1.9. San Diego down 2.2%. What's interesting, San Diego's down year over year, even though we had the month over month increase. So still doesn't match up to where we were year over year. So condos and townhomes have dropped in value. You factor in inflation, these are even bigger drops, except for San Bernardino. If you're thinking about buying or selling in SoCal, we've been doing it since the global financial crisis. Reach out for more info below. Altos Research reports, you love them, I love them. Let's dive into them. So we're not going to pull any punches in this data. Starting at the California level, I want to show you some important things. median days on market has gone up. There's no denying that. We see in both national, California, and all the counties we're going to cover, you can see that there's an increase in median days on market, higher than it's been going back all the way here to 2020. So this is showing you 5 years of data. And if you look at the way days on market works, this time of year, these circles, these pips mark year over year, you can see in every case, for the most part, it may stay flat or it goes up. That's it. There's no going down from this point in this time of year. We can see here, 2022, it went up. It was flat in 2023, then went up. 2024, slightly flat, then went up. So what does that mean for 2025? If we're going to extrapolate based on what we're seeing in these years past, we're going to see this stay flat and it's going to go up. And again, going to be higher days on market levels than we've seen since 2020. But even seeing this, I want to show you why I think things are about to change. The difference is inventory, and I'm going to show you also the number of properties being absorbed. That's highly relevant. These are the things that are different right now. So now looking at inventory, we can see it's higher than it's been in the past 5 years. If I brought in pre-COVID inventory, it'd be even higher. We're not at pre-COVID inventory levels, but we're also not at pre-COVID sales levels. Let's be fair, we're not going to pull any punches in this data, but what we can see is that the inventory has started to turn and go the other way. This is at the California level, and it stays pretty much the same for all the counties we're looking at. Now, if you look at the past 5 years, that wasn't the case at this time of year. It still increased a little bit, or it was a slow turn and went down. Here we see it turned already, and it's continued to go down. Then we look at new versus absorbed. This dovetails with what we're seeing in the increase in mortgage applications that started in July and will probably continue through the end of the year, although we'll have to track it and see. So we can see when you look at new versus absorbed, and if you've been watching these, you've seen times where these numbers are almost identical, and you've seen times where actually the new number is higher than the absorbed number. We saw that in the past couple months where the new inventory was higher. So that meant inventory was stacking up. Now you can see here that new versus absorbed in all of the quartiles, we can see a dramatically higher number of properties being absorbed. It's almost double in some of these quartiles that properties are being absorbed. So this is showing you that demand is up and potentially increasing. And that's why we're seeing this drop in inventory. Some of it is people taking their homes off the market, but the other is we're starting to see buyer demand creep in again. Very early, could change. Maybe I'm wrong. I'm not afraid to say that, but calling it out here first. Now let's see what we can see in the Southern California counties, thanks to Altos Research. And make sure you subscribe to these things. You know I love them. Here's Orange County. We can see inventory's turn started to go the other way like we saw at California level. And we can see new versus absorbed. Look at the top quartile. Double the number of new properties that came to the market were absorbed at the top quartile, the most expensive price point. So this looks like it's moving through all price points. It looks like things are starting to heat up again in OC. And we may start to see a drop in days on market. LA, somewhat precipitous drop in the level of inventory, new versus absorbed. Big difference in numbers, almost double in many cases. Interesting to see this trend play out. And look at the inventory. We saw actually had a mini spike in June in Riverside, and now it's gone the other way. So inventory is dropping, and it looks very different from years past where we are with inventory. We haven't seen a peak and drop like this. New versus absorbed. What are you seeing? I don't have to repeat myself. San Bernardino, a drop in inventory. Has that peak like we saw in Riverside and a drop in inventory. New versus absorbed. Look at that. Many cases, double. We're seeing a doubling of absorbed versus new inventory, which is not what we typically see this time of year. That's more of a busy spring buying, selling season typical trend. Ventura, even Ventura marched into its own drummer. They had that shift in inventory. It's dropped. New versus absorbed. Double. 7 new listings at the top, 15 absorbed. Interesting to see how many of these numbers have doubled in the amount of demand. Finally, San Diego, same thing, had a peak, inventory turning the other way, and yet again, a lot more properties being absorbed than coming to the market. We're going to continue to see the inventory drop, and maybe, sounds crazy, but maybe an atypical increase in median home price this time of year. Am I crazy? Is it crazy to think that there's actually going to be an increase in buyer demand? Let me know your thoughts below. What are your next steps in this housing market? Number one is watch this next video right here.